me record this video. Okay, so we all here because we want to learn something new today, and that's how to prevent sudden losses while trading your boom and crash. Okay, so there's this thing that always happen, and especially to new traders, which is once you get to an overbought level, which is resistance zone, you tend to place sells, and then when it gets to your oversold level, which is your support zone, you tend to place what? Buys. All right. So the mistake traders do is they jump into the trade the moment they see that the price has gotten to an overbought level according to the indicator that you're using, maybe your stochastic or maybe your relative strength index. And then with the level they place on above and below, let's say level 80 or level 20 for oversold, and then traders up in straight and place their buy or their sell. Why? Because the market has gotten to over that zone, which is always called overbought and oversold. Now, I want to teach you exactly how to avoid making those mistakes that occur when you see the price get to that level, that 80 level and the 20 level. All right, those mistakes, I want to show you how to prevent it so that you don't buy at the wrong time, sell at the wrong time when taking your trades. Okay, so I'll be sharing my screen right now. I will take you on a whiteboard. I'll take you on a whiteboard first before I take you to the main charts. So let me share my whiteboard. I need to hold it. Can you guys see the whiteboard? I hope everybody can see the whiteboard. Can you see my whiteboard? If you can see my whiteboard, speak to me. Hello, traders.
Hello, sir.
Can you see my whiteboard?
Yes, you can see it.
Good.
Yes, sir.
Please make sure you're talking to me so that I'm not talking to myself. All right. So now this is exactly what I'm talking about. When we let us take it for instance, this is then we have this level in a relative strength index indicator as overbought and oversold, right? And then let's take for instance we are working on, please if you are the one who has the dog that is barking on the background of your mic right now, turn off your mic. Thank you. So let us take for instance boom 1000, and we know that boom has candlesticks going down, right? Candlesticks going down, and then it suddenly has spikes going up like this, right? So let us take for instance the market gets to level. Now someone would tell you it's oversold, so you should buy. Now here is the secret. Here is the secret. In boom and crash, you don't just pop in and sell because it has gotten to this level. What you want to do is to make sure that you allow the markets go down, all right, come up. Okay, we take for instance you're in your 1 minute time frame. Okay, allow the market to come up. When it comes up, you want to look at, this is your indicator. All right, this is your indicator. Your chart is going to be up, right? Your chart
excuse me, Tim.
Yeah.
We are hardly hearing you. It is very low.
Oh, really?
Yes.
Let me see. what's happening. Let me see from my end. Let me see from my end. Property. Comment. Let me set up. Let me check my mic. Can you hear me clearly now? Can you hear me clearly now?
Yeah, it's much better.
Okay. All right. All right. All right. How is it now? Is it clearer now?
Yes, it is good.
Perfect,
Yes, it is
perfect, good.
Okay. All right. So let's go straight to business. So we take, for instance, this is your here is your main chart, right? And then here is your indicator. Okay, let me just clean all this and then give a fresh start. But I need to admit some people coming in again. All right, all right, all right. I'll do it next week. So that would let me draw it absolutely how it looks on your phone or on your system. Now, this is exactly how it looks. Let's take, for instance, we're working on our phones. I'll draw your phone like this, and like this. Okay, we divide it into two. Here is your chart and here is your indicator. Now in your indicator, you have it like this. And you also have it like this. All right. Then let's take, we're working with boom 1000 and then boom 1000 coming down this way. And then suddenly spiking up. And then coming down again. Okay. Now, why this is happening on your main chart, this is what you see in your indicator. You see something like this. Let me use another color. You see something like this in your indicator. All right. And when a spike occurs, it takes it up. You're working on is if your indicator is working on exponential, you get to notice something like this. Okay. So why the market is coming down, you're trying to observe when is it going to get to oversold so that I will buy, right? So you keep observing the markets and the market and the trend keeps coming down. Now, here is the mistake that most traders do. Once they notice the market has gotten to this level, they quote to themselves, oh, it's an oversold, so let us buy. But when I take my trades to prevent nonsense, I allow the markets to keep moving. Oh, please mute your mics, traders, mute your mics. All right, so I allow the market to keep coming and coming. Now, this is the real thing here. You get to notice that if the market is still selling, okay, if the market is still ready to sell, okay, the market will keep going down. And while it's still going down, you get to see that your indicator will keep floating like this, This is how your indicator keeps floating, okay? But a lot of traders at this time will place their buy, telling you is oversold, let us buy, which is not right. So I don't advise that when you see indicator doing this below the level, the oversold level, I don't advise you to place buy. A lot of traders always place their buy because they believe it's oversold anytime it has to come up. But you get to notice that the indicator keep moving this way. Some of the please mute your mic. Mute your mic.
Yes.
Who is this? Please mute your mic. If I figure it out myself, I would not mute you, but rather I will remove you from this meeting. So please mute your mind by yourself. So you get to notice that the indicator will keep moving this way. All right. If it be your relative strength index, this indicator, while it's moving up, the chart, the main chart here will be shifting. I will show you, I will take you straight to my chart soon and show you those things very well. I just want to give you a little illustration here. You notice that the chart, the main chart will keep shifting while giving space for this indicator to keep moving downward. Now, the right time for you to buy is when the indicator has played all the game it wants to play behind the scenes here and started coming up. Now, I don't advise you to just go straight and buy because it has come up, because anything can happen. It can decide to come down again. All right. So what you want to do is allow this indicator to come up completely, fully. And when it does come up, you want to make sure on your main chart, you observe that the indicator, that the main, the candlesticks has closed at least two or three candlesticks out of the zone before you place your sell. And on the other hand, you also want to make some further cross-checking with price action. I will show you all those things right now when we get into the charts. The same thing applies that when the market is going bullish, okay, and gets into the zone, do not go ahead selling, because there's every tendency that this market can keep spiking upward. So I advise that what you do is to allow this market come down completely. After coming down, you want to observe, let 3 or 4 candlesticks close on the main chart before you place a sell. I will take you to the chart and show you exactly how to use price action on the other hand. So let me share my chart with you guys right now. I'm coming. New share. Okay, can you guys see my chat now? Can you see my chat, traders? Just one person turn on your mic.
Yes, you can say, yeah.
Okay.
Yes, you can see it now.
All right. So now here is the strategy I gave you guys today. All right. I also noticed someone sent me a message on my DM that the strategy is not doing so fine on his system. So now we are on the system here, and I want to show you exactly how to do those things. I'll move this downward. Okay. So now this is exactly what I was saying. Let me look for a very good example. I'll look for a very good example. Please turn up your mic. When I need your mic on, I will let you know. Turn up your mic, okay? All right. I'm looking for a very good example to explain this to you guys. Need a very good example. Okay, now, okay. Now let us take a good example that we want to buy. We're looking for an opportunity to buy, and we expecting the market to get to an oversold level so that we can go ahead and buy, right? Now, if you observe the moving average coming down, okay, while it's coming down, you get to notice that while you're moving your chart left and right, this indicator is lagging behind, is moving up and down. Can you see it, traders? The indicators are moving up and down. So that's the confusing thing about it. So for you to be able to confirm that this indicator or the price has really oversold, you want to make sure that you allow the market or the indicator to, you can see as I'm taking it back, you can see that the indicator that was down is coming up. You can see going up. Here is down, here is an oversold. This is where people will say, let us buy. But you get to notice that if I drag it back, you can see that it's still selling. Here is on oversold. A lot of people will say, let us buy. And you get to see that if I drag it back, it's still ready to sell. So now take a good look at this junction. You can see at this junction that while I'm moving it back and forth, it's still at this junction. This is a good example of an oversold, a real oversold level. Now, you get to see that it moved into the zone, the 11.42 zone, and then came out of the zone, right? While it came out from the zone, you see on the main chart, one spike, a little candle, another spike, all right? One spike, a little candle, another spike, proving that the market is really ready to buy. Why the spike is taking place? Why the spike is taking place at this junction? What do you observe? I need this out here. Now, why the spike is taking place at this junction? What do you observe here? You get to see that the indicator has moved up just a little from what? The zone. It moved up just a little from the zone and proved to be going bullish. Now, while it's going down here, another spike takes it higher, all right, creating higher highs, and the indicator goes a bit higher, comes down, another higher, all right, going up and up. So if you end up falling victim saying, okay, is an oversold, let us buy at this junction, you get to see that this market is still selling. So you need to make sure you do not let the indicator deceive you by showing you some fake outs or some fake oversold and some fake overbought. Okay, if we're, let's take for instance now, we're looking for opportunity to, let's take for instance now here, a trader would see this at this junction and say is over wait, let me look for a better example. I need a better example. I need a better example for the, I need a better example. Okay, so this is another, this is a good example of a real overbought and a real oversold. Now you get a look at this junction. Let me take it back and forth, and you see that this indicator is stagnant, is not moving, all right? Is not moving, is stagnant, to prove that it's really overbought. And how do you prove it? It got into the zone, all right? When it got into the zone, look where it got into the zone. It got into the zone at this junction, all right, and kept on moving, kept on moving. You can see how many candlesticks it is using to move, all right, and now it comes out at this junction, the red indicator, also to prove to you that you should also wait for the red indicator to come out also. Now this is where the red indicator came out, the green has come out since, then the red one came out at this junction. At this place, the market has proved that, okay, is really overbought, it's time to sell. Okay, a lot of traders always fall victim for this overbought and oversold thing. So you want to make sure that you allow the indicator to go into the zone and come out. After coming out, give it 2 or 3 candlesticks to confirm if truly is ready to sell. Don't just jump into the trade because it has gotten here, and don't just jump into the trade because it has come out of the zone. Give it 2 or 3 candlesticks to prove to you that yes, sellers have really taken power, because this forex over thing is all about power. The sellers either take power or the buyers take power. All right, that's what they call it, the bulls and the bear. So one person has to take full power of the market. Okay, now we get to see here. Now let us take another example. Let us take another example. After this, now I'm going to show you how to use price action also to determine your trades. Okay, let me look for another typical example. Okay, now let me see. I need something reasonable. This is a consolidating area. This is a consolidating area. Okay. 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 I'm looking for a typical example to explain further. Okay, I can't find any other, but I believe you understood what I just explained to you. Now, let me show you how to use price action also to determine your trades. Okay, let me show you how to.
One question before you move, Tim.
Okay,
What I want to understand with the overbought and the oversold. The overbought, is it the top level line and the oversold is the bottom level line?
yeah, yeah.
Okay.
The oversold is the bottom because you're selling, sell,
Okay.
oversold. Then the top line is overbought. You're buying, bullish. Okay, was that understood?
Okay.
All right. So now let's get a bit into price action. All right. Now, if when you want to, but now with what I'm going to show you, you're going to also use it to figure out some areas where there could always be spikes. Now, I'll tell you before we start that a spike can take place anytime soon around this junction. And I'll prove that to you. And I hope that it works out exactly as I explained. If you go to your a higher time frame, let's say the 15-minute time frame. Let's take for instance the 15-minute time frame. I believe everybody know how to use support and resistance. If you don't know how to use that, maybe when I upload this, I'm recording this video right now. When I upload it, I'm gonna put on the description below the support and resistance video I made some time ago. All right, so this, let me spot out this area. I'll just color this to make it white so it could be clear. Make it bold. Done. Okay, now I would put this here. Let me send it to a 5-minute time frame. Okay, so you get to see that there was a time when the market was selling and here became a support, sending the market back upward. All right, let me zoom it out a bit more. Okay, here was a support zone for the market going back upward. Here was a support zone to push the market upward. There's every tendency that once this market gets to this zone again, there's gonna be a spike. And I hope that will happen while we're on this webinar so that you get to see that there's every tendency that this market is going to spike up again when it gets to this level. Why? Because this level is a support area for this market. If you want to spot out a resistance zone, okay, we can spot out a resistance zone like this. Let's say I'll put it like this. Okay, now this is a resistance zone because it was a support before sometime in the history and became resistance here. So there's every tendency that if this market spikes upward, it's gonna spike here and stop here, or it's gonna just spike a little. Okay, so if this market ends up breaking through this resistance zone, if it breaks out through this resistance zone, for you to be careful not to make mistakes, because sometimes there could be fake outs, you can then decide to trail this support. You can decide to trail it to the bottom of the wick of the previous candlestick, okay? And then expect the market to keep coming down. Now, if this market comes down and breaks through this support zone, okay, then there's tendencies that this market is really ready to sell hard, okay? There's tendency that this market is really ready to sell hard. For you to confirm, you can then go to a much higher time frame and then watch the history. And if you view the history, you get to see that the market has never gotten to this level since the 15-minute time frame in the past. So if this candlesticks break through this support zone at this somewhere at this level, there's everything is that this market is going to sell really hard until it gets to another. Let me bring these indicators down so that we can get a full view of the charts. Okay, now on there's like I said in the 15-minute time frame, when it gets to this level, there's everything is that this market is going to go bullish until it gets to a time when something was resisted it in the past. This is a resistance zone in the past, and then if you bring out your support line here, then this means that you should look forward to taking profits somewhere around here, because the market is going to sell hard to this level where there was resistance support before, and that zone might support this market to go back upward again. So while you're taking your trade from the 1 minute time frame, okay, while you're taking your trades from the 1 minute time frame, we want to see what's going to happen when the market gets to this level. These are support zones. So we want to see what will really happen when the market gets to this zone. So we're going to keep watching out. Okay, we're going to keep watching out. And then let me bring out this again and see. Let me bring this out again and see. Okay, it hasn't gotten to the oversold yet. I just want to make sure I show you guys some things, okay? We'll let it get to the oversold, and then you will let me know if it's really time to buy or not. So while we are waiting for the market to keep moving, while we're yet waiting for the market to keep moving, and let's see what will happen soon, then we'll go to the 5 minute time frame. So from your 5 minute time frame, you'll be able to view the past, okay, and see where the trend is currently and see if it's close to any support or resistance zone. That zone, if it's close to any support or resistance zone, it should be telling you that there could be a spike. So therefore, you should avoid that spike, okay? And if it's close to any resistance zone, it's telling you there could be potential selling opportunities, okay? This is how you can use price action to trade your boom and crash together with your indicator. So while your indicator is telling you that the market, is on oversold, okay, you want to make sure that before you place any sell, you look at your main chart. If your chart is proving that the market, the price has gotten to any support zone, okay, if you look at your chart and the price is not on any, is not close to any support zone, then don't mind what the indicator is telling you, because the market could still keep going deep down, okay? The market could still keep going deep down because there's nothing yet to support it. What it needs is support, okay? What the market needs is support. Let's go back to our 1 minute time frame and observe the market. Now we can see it has broken through this former support levels. So now, like I told you, you trail your trend line, take it down to this level. This is where a spike occurred before. All right. So let's see if anything is gonna happen at this junction. Okay. So you can see how long it is, and
Hello, sir.
hello. You trying to ask a question?
Yes, sir. I'm very confused about the support and resistance.
Please, could you speak up so I'll hear you well?
Sir, I'm very confused about the support and resistance.
Support and resistance. A support zone is an area that's pushed an area that supported the market to move upward. Support. Let me take you to my whiteboard and then explain a bit about support and resistance. Okay, I'll just clear all this. All right. Now we take this is, let's take this, and then let's take this. Okay, so here is known as support. Sorry, there's a mistake. There's a mistake. Here is known as resistance, and here is known as support. Take notes, at all time your support must be below and your resistance above. Your support must be below and your resistance always above. Now, if we take, for instance, in a house where we have the ceiling, okay, and then we have the floor. All right. Now you have a ball in your hand. If you hit that ball on the ground, what do you think would happen to that ball? I need an answer. If you bounce a ball on the ground, what will happen to the ball?
It will bounce off.
It will bounce up. Why is it bouncing up? What gave it the strength to bounce up?
Support.
Supports.
Because of the flow.
The floor gave it a support to bounce up. That's why it's called support.
Support.
All right. And when it bounces up to the roof, what happens to the ball when it gets to the roof? The roof resists the ball from passing through and sends the ball what? Back down. So that is why here the top is called resistance. Okay, so now what are we supporting and what are we resisting? We are supporting price up and we are resisting price down. So when the market is bullish, this is how it moves. All right, a little pullback, it moves higher, a little pullback, it moves higher, a little pullback and higher. All right, this is exactly how the market moves. A market can never move straight up. It keeps moving with little pullbacks. When it gets to this level, it resists the market going back down, okay, until it gets to a level where it gains support again. Now, what the price is looking for an area that is going to support it to keep moving up. So that is why there's always this pullback. This pullback is just for the market to come down and gain support to keep bouncing up. When it gets to this level again, it means a resistance has occurred here. Okay, a resistance has occurred here and pushed the market down. Then the market gains support again to push up and break through that resistance. When it breaks through the resistance, something resists it here again. Whatever resists it here again, if you look at your main chart, you will notice that it has resisted something in the past. Okay, I will take you to the chart again and show you. All right, it has resisted something in the past, and that was why that place was strong enough to resist the market going up. And then the market pulled back a bit, gained support from somewhere that has also supported in the past and moved up. Now let me take you back to the charts. Let me take you back to the charts. And show you. Okay, what do we see here now, traders? What happened here? A spike, right? A spike, right? And what did I tell you earlier? That a spike will occur here, isn't it?
Yes, sir.
So what do you understand by what I've just explained? This is a support zone. It has supported the market before, and there's tendency for this market to be supported back up again. All right, so this is for you to know. Now your indicator has showed you that, okay, it's oversold. All right, your indicator has showed you oversold. Now the question now you're going to ask yourself, should I buy? Is there going to be another spike? All right, that's going to be your question. Is there going to be another spike now? Now for you to know if there's going to be another spike, you might now decide to look at the past. Okay, the market supported up to this level. Okay, another spike has occurred. So this is to prove to you that the market is really in an oversold level and the market is ready to buy, because you've seen the first spike, you've seen a few candlesticks, you've seen another spike going up. Okay, so it means the market is really ready to buy. So we should be expecting more spikes in time to come. Now let's put this is where why did the market, it spiked up here and stopped? Why did it stop? Because something has resisted it. And if you look at the past, you see that something resisted here in the past. If you look at the past again, something resisted here in the past. So can you see that the chart works with human psychology? All right, this is what people who are trading somewhere else around the world, just like where you or everybody is right now around the world. Everybody is looking forward to buying from here. Everybody's looking forward to selling from here. Everybody's looking forward to selling from here. Everybody's looking forward to buying from here. So as is happening all over the world, it keeps repeating itself. So that's why using support and resistance during your analysis is really, really important, because it helps. It is not the holy grail of the whole thing, but at least it helps. There's so many other things that you should apply while taking your trades or while analyzing your market for proper confirmations. Okay, so support and resistance is not just the holy grail, but it has enough power to help you in your trading career. All right, so like I explained earlier, the spike took place and there's tendency for this market to keep going up. Let us see if there's truly tendency for this market to keep going up. We'll go to a higher time frame. Now, if we go to a higher time frame, we see that, okay, another spike has taken place. Like I told you guys, that is really in an oversold level and ready to buy. Spike is still coming. So what our expectation should be now is that this market should keep spiking till it, okay, another spike again. All right, as I'm talking, it's still happening. Another spike again. Now, when this market, I'm expecting this market to really touch this level where it resisted before. Okay, where it resisted before. And even if it doesn't touch it, okay, then that simply means it's because this market is actually a downtrending market, now consolidating. As you can see, let me bring this. This is a consolidation. Okay, consolidating. So it might decide to break through to touch this resistance zone where this market was resisted before, or it might decide to break out and continue its downtrending movements. So traders, this is exactly how to use price action while running your boom and crash together with your indicator. Okay, so your indicator has told you now and proved to you that yes, is ready to buy. Okay, and now you see it's getting to overbought. Okay, it's getting to overbought gradually. So I hope everything I've explained to you guys really makes sense to you, and I hope that you'll be able to use. Some people are just coming in now. Anyway, thank God I'm recording it. So I hope you'll be able to use price action, just this resistance and support of a thing, to take your trades while you're working also with your indicators. All right, because I get a lot of questions from a lot of traders who keep telling me, hey team, your strategy is powerful, is wonderful, but I got caught by spikes. And that's because they didn't use price action to determine areas where a spike can come. So not because the indicator tells you it's on oversold, then you start buying, and not because it tells you it's on overbought, then you start selling. You want to use price action to figure out if the market has really gotten to a resistance zone or a support zone. All right, traders. So if you have any question, or if you think you've learned something here, just let me know. Speak to me now. It's your turn to talk to me.
Hello.
Hello.
Hello,
Hello.
I
sir.
have a question.
Okay,
Hello,
let's
sir.
one after the other. All right.
Can I go ahead?
Wait.
Hello, sir.
Everybody
Sir,
wants
can
to
you?
talk at the same time. Okay, wait. You know what? I will let me take us back to everybody. Please just mute your mute. Everybody get muted. Get muted. Will come in one after the other. Okay. Okay. Let me get back to my main view. All right. So if you have a question, just raise your hand. Let me see. If you have a question, just raise your hand and let me see. Right. Okay. Let me see your charts. Let me see your chart traders. Okay. All right. Okay. Turn on your mic. Let us see. Let me see how it goes now. Elizabeth, you have a question? Okay, turn on your mic. Turn on your mic. Let me see. I'm trying to figure this thing out. All right. Ask your questions. Ask your questions. Okay.
What Zoom label are you using right now?
The Zoom level. Let's go back to the chart. Let's go back to the chart. Okay. Let's see the Zoom level. I'll take it down. Okay. Now that reminds me. Are you guys still see my chat? I hope you can still see my chat, huh?
Yeah.
Okay.
Yeah, I can see it.
Okay, I noticed that whenever I'm giving a boom and crash strategy like this, and I tell people your Zoom level should be 2 from the last, 2 from the last. A lot of people still get confused. When I say the last, this is the last. This is the first. This is the first. All right, and this is the last. So if I say take it up twice from the last, this is the last. You take it up 1 and 2. Okay, that is 2 from the last. Okay, if I say take it up 3 times from the last, this is the last, and this is 1, 2, and 3 from the last. Okay, so while training you guys right now, I'm using the third Zoom level, but on this strategy, I used the second Zoom level, which is this one. Okay, most times you don't really need to stress yourself on knowing if it's a second Zoom level or third Zoom level. All you just need to do is set your chart and see how the strategy is working on that Zoom level on your phone or on your PC. If it's working as explained in the strategy, then you can go with it. Okay, because I've got to notice that it's not about the Zoom level, because if you see, okay, now here it's still working, overbought, selling, oversold, it's still working. And even if I zoom it up one more time, it's still proving overbought and oversold. So it's not just about the Zoom level, okay? It's not about the Zoom level. Let me take it up one more time and see. It's still proving the overbought, still proving the oversold, okay? But for the strategy anyway, is the second Zoom level, the second from the last. Any other question? Any other question? Stop sharing.
Yes, sir.
All right.
Yes, sir. Can you hear me?
I can hear you.
Sir, please, I need a brief explanation about how to analyze these support and resistance.
A brief explanation on how I analyze with support and resistance.
Yes, sir.
Okay. Any other question before we go into that?
My question is similar to that. I want to know how do I know the correct place to draw my support and resistance line?
Okay. Similar. Any other question from any other trader?
Yeah, I have a question, but it's different from what they are asking.
Please speak up. I can hear you clearly.
I have a question, but it's different from what they have asked.
All right. Let me hear your question.
Okay, this is my question. Let's assume that you are selling. You enter the market and you are selling. How will you do to know that you can sell long, stay long in that selling market? without being caught by a spike.
Okay. Turn off your mic, please. Turn off your mic. Okay. If you are selling or if you are buying, how would you know that you can sell long or buy long without being caught by a spike? And then also, how do I use support and resistance? It's all about using price action. Okay, if you want to use indicators, indicators always lag behind, and indicators, I don't advise you rely so much on indicators. Like my students in the academy, what I'm going to teach them, I'm going to teach them pure price action so that they don't rely on indicators. Because during my early stage of trade of forex training, I always use indicators. I rely so much on it till I learned how to use this price action of a thing, and I'm still learning it till today because there's so much to learn. So if you want to know the right time to buy long or sell long using price action, using support and resistance, let me take this down. Okay, I will just take these indicators down so that we can have a clear chart. All right, you can go to your higher time frame, let's say the 4-hour time frame. You can see some analysis that I've been making lately. So when you go to your higher time frame, you want to first of all understand the structure of the markets. Okay, when you understand the structure of the market, you understand that this market is a bearish market. You understand that the market is selling, right? So now you figured it out that is a selling market. The bears are in power here, pushing market downward. So when you go to another time frame, you want to spot out supports and resistance. Let me clear this once. Let me clear all this. Let's get a fresh chart. Okay. So you want to spot out your supports and resistance. Now, for you to figure out a real support or resistance, you must make sure that the market has respected that zone twice or latest 3 times in the past. I taught you guys sometime, I taught you guys sometime how to know a weak support and resistance zone. Maybe while uploading this video tomorrow, I'll also add that to the description. Not every support and resistance zone, because it was tested oftentimes and then you say it's a strong support zone. No, if a zone is tested multiple times upon multiple times, there's every tendency that that zone can become weak. So you must make sure you don't rely so strongly on that zone. If let's take, for instance, let me take you right now to my whiteboard and explain further. I'll clear all this. I'll clear all this. Now, watch what I'm going to show you guys right now. This is a resistance zone. This is a support zone. Before I talk about here, I will show you, let's take this as a gate or a door. All right, I always love using illustrations, simple illustrations. Now, you're going to answer this question. If I hold a very big log, okay, and hit that log on this door, 1, take it back, hit it again, 2, take it back, hit it again, 3, take it back, hit it again, a 4th time, what do you expect this door to do? I need an answer.
It should break.
Okay, so why is it gonna break? It's gonna break because I've hit it the first time, the second time, the third time, even the fourth time, and it's getting weaker. So the same thing applies to support and resistance that whenever a market goes up, hits a resistance once, comes down because it has resisted it, goes back up, hits a second time, all right, and comes down again. This, you should take this place as a support zone because here has resisted price twice. Okay, so here you can take it at, okay, this is a good resistance zone. Is strong enough to resist price. But when you notice that that same area has the price has hit that same area again a third time and even a fourth time, trader, at any time you should expect that this market can break out because that zone has become weak. So that is why at every given time you always find out that market breaks out of resistance zones or breaks out of support zones because that zone was strong before, resisted price before, but now has become weak because of several touchings. So it became weak. So that is why you should not always say, is a good support zone, let us sell from here. Is a good resistance zone, let us buy from here. No, don't rely so much on that. You should figure out if this zone has resisted price more than 3 or 4, even 5 times, and you should figure out the fact that that area can finally become weak and price can break out of that area. Okay, so let's go back to the charts. So when you have spotted out that this market has supported here before, market up, it came down, supported it again, went up, now is at the price is at this junction again. And if you get to see, let me zoom it up. Okay, always make sure when plotting your support and zones that your trend line touches the wick or the body, a bit of the body, okay, the closing of the body or the wick. Okay, so at this place we get to see that there was rejection from the sellers here. Sorry, there was rejection from the buyers. The buyers pushed market upward from here, then price supported here again and supported a second time. Now it's supporting it again, moving price up, but sellers are rejecting a bit. Okay, sellers are rejecting a bit. Now here has supported before, supported here before. You see, this is another support zone where it moved upward and now has come down again. Now it has come down again and trying to push back upward. But now sellers are rejecting. Sellers are rejecting. So you want to see if this market is gonna break out from here since it has supported 1, 2, and then is it gonna support a third time or is it gonna break out this time? Also, your resistance, the same thing applies to your resistance. When you want to plot out your resistance, you want to make sure it touches 1, 2. It has resisted 1 before. 2, you look at the past, it's supported at this area. It's supported at this area. You look at the past here, it resisted here. Sellers rejected a bit before markets really pushed up. So it has supported, resisted 1, supported 2, 3, 4. Okay, and now pushing down with full force, pushing down with full force. Okay, so that's because it's pushing down because when, if we remember on our 4-hour chart, is a bearish market. Okay, so that's why you always hear people say don't trade against the trend, trade with the trend, because the trend is your friend. So as long as it's selling, you should always look forward to more selling than buying. All right, all those things we do, buy from support and sell from resistance. Those things we're doing, we are actually scalping the markets. If you want to trade with a trend, if you want to trade the market like a real trader, you trade with the trend and not scalping and scalping. So we see that is a bearish market, and then the market came upward and it still broke out. You see, this area is no more respected. Is no more respected by the markets. But when it came down, trying to come up, the bulls trying to take power again. But this area became resistance, pushing the market down. So this is where the market is right now. So you want to figure out if you should sell long. You want to sell long only when when there is a breakout. You want to sell long only when there is a breakout. And why should you sell long? Why should you even be comfortable to sell long? You can be comfortable to sell long because you get to see that there has been no activity on this junction in the past. Okay, there have been no activity at this junction in the past. So there's every tendency that if this breakout takes place, this market is going to sell so long until it finds an area where there have been activity in the past. And to view if you can see an activity in the past, you can go to your daily time frame. You can go to your daily time frame or even the monthly time frame and view what must have happened somewhere in the past. Now, why I love trading view is going to show you everything you want to see, but MT5 platform always restricts some certain things. So I'll advise you guys to always learn how to use the trading view. Okay, so where was I? Let me take this back. So you want to sell long if this breakout occurs. Okay. All right. See here now. Okay. You can see here, if the market breaks out, there's every tendency that the market is going to resist support again from here because something has happened here in the past. Okay. Something has happened here in the past. So this should be your next lookout. When you sell, this should be your next lookout. And if you now take there's a 30 minutes time frame, let's zoom it out a bit. Zoom it out. Man, I love trading view because if it's trading view, I can take this chart up and see what I want to see at it on the top. But MT5 doesn't give you that opportunity. So you want to be observing when will the market break out. If the market breaks out of this zone, there's every tendency for you to sell long till it gets to this zone again. When it gets to this zone, because this zone has, please turn off your mic, because this zone has only supported this zone has only supported once. Okay, there's every tendency that if this market breaks out, it's going to support it again to go a second time upward. Please turn off your mic, turn off your mic, turn off your mic, traders. Okay, so this zone has supported just once, so we're looking for a second support from this zone again, and that second support is going to come whenever a breakout occurs here. If a breakout occurs here, you want to sell and sell and sell till when the market, and take your profits somewhere here. All right, when you take your profits somewhere here, you want to look forward to the bulls taking power to push market back upward again before it will break out. That's why if you notice, whenever I give you my analysis on Instagram, I always post something like this. You see me draw something like this. And I'll draw something like this again. Please turn off your mic. Who is this? Turn off your mic. Then I'll draw something like this. Why am I drawing something like this? I'm trying to quote that this market, whenever it breaks out, it's gonna come here and support is gonna move it back upward to resistance. And if this resistance is good enough and strong enough, it can push this market to break out again. Okay, so you get to see a first support, a second support, and Don't even get it twisted. Since this is Forex, anything can happen. Here can support and another support might take place again before a breakout. Okay, so if we look at our 1 minute time frame, we get to see that. Let me even take it to the 5 minute time frame, so it's gonna be okay. If you look at your 5 minute time frame, you get to see that there's a very long selling opportunity before it gets to this level again. When it gets to this level, there's gonna be a very long buying opportunity before it gets to this level to resist it down again. So this is how the market keeps moving up and down, up and down. So I hope you understood that. Any other question?
Yes, I have a question. Thank you for your time.
All right.
Please, I want to ask you, you made mention of trading view.
Okay.
Do you recommend it for trading to other than MT5?
You don't use trading view for trading. You use trading view to analyze your markets. Okay.
All right.
Yes.
Okay.
You use trading view to analyze your markets. Let me see if I can take you to my trading view
Okay.
platform. Just give me a little bit time. Let me see. Let me see where I am. Okay, let me see. New share. All right, this is my YouTube channel. I need to move this out. Wait. Can you guys see my Google Chrome? Is everybody seeing my Google Chrome?
Yes, we can.
Yes,
Yes,
you can.
you can see.
Okay. Now this is trading view loading. Okay, this is your trading view. This is trading view, tradingview.com. Okay, now trading view, in trading view, you can analyze mostly currency pairs. Okay, you go to charts. In trading view, you can analyze mostly currency pairs. Now, for you to be able to analyze boom and crash in trading view, you need to go to derive. When you go to derive, you will see an area for trading view. Once you click it, it's going to take you straight to the trading view platform for derive. But I'll give you a quick link. Instead of going to derive, I'll give you a quick link. Let me see that. See. Okay. All right, can you guys see the screen right now?
Yeah. Yes, yes.
All right, you can see volatility 25 here, right?
Yes.
Yes.
Okay, I will send a link in our Telegram channel, a quick link for you to be able to access this charts so that you can analyze volatility, boom and crash with trading view. Because if you don't go through that link, you will not be able to see volatility index view. So I will send a link in our Telegram channel so that you'll be able to use it to see, analyze your volatilities and all the rest. So if I take, let's say, volatility 75, and then I'll click on enter. Let me see. 75, 6, 5. Okay, this is 75. Let me see, boom, 500. got it right. Okay, so this is boom 500. Now, the interesting thing about TradingView is that you can move your charts with ease. Okay, you can even move your chart to the left so much. All right, you can move your chart upward or downward. All right, so TradingView gives you a more flexible way to analyze your market, and you have all the tools here on the left hand side. Okay, so you have all the tools, and then you can also get opportunities to calculate your pips. Let's say I'm going short. I'll click on short position. You want to calculate from here to here. Okay, let's take for instance you're taking a sell from here. You want to calculate how you want to risk a little like this, and you want to you're looking forward to going short as long as this. So you'll be able to calculate how many bars, how many pips, how many percent, and how much you're losing. Okay, so always make sure you are losing little and looking forward to earning more. Don't ever don't ever try to win little and risk more. This is why a lot of traders blow their accounts. A lot of traders risk so high. They set their stop loss so high just because they want to get this little thing. No, always risk little. Do not ever risk more than 2% of your account. Know how much you have in your balance and know how much percent is 2%. Know how much is 2% of your account. Do not ever risk more than 2% of your account. A lot of traders will always go with high lot size. I don't advise you to do that, especially when you have a small account. Always risk little and look forward to earning more. Okay, so I advise you guys to try and join the academy, because in the academy I will teach you how to look for high probability trades that enables you target high and risk little. All these are the things that I'm going to teach my students, which you need to learn how. You need to be part of it. Okay, so you see what TradingView is doing. You can take it down, you can take it up, and have enough space to see what you want to see. All right, I can even use here and draw whatever I want to draw. Okay, so TradingView is more flexible, but the only thing about using TradingView for binary is if you make your analysis and if you log out, unless you save it. Okay, unless you save it. If not, if you don't save it, everything you analyze is going to go off. Unlike MT5, in MT5 when you make your analysis, everything's going to still be there for you. But in TradingView, if you analyze on this binary strokes TradingView, if you don't save, everything's going to clear off. But if you are in the normal tradingview.com, let me show you on the normal tradingview.com. If you're on the normal tradingview.com, where you analyze just currency pairs and cryptocurrencies, as long as you have an account, all you need to do once you've opened an account, okay, you can make your analysis here on your PC and then download the TradingView app on your phone. Whatever analysis you make here on your PC will automatically be on your phone if you have the TradingView app on your phone. Okay, whatever analysis you make here on your PC is going to also view on your phone because you have an account with TradingView. So I expect that once you get into TradingView.com, open an account, okay, so that when you make your analysis, it's going to show on your phone. But for binary, it's not going to show on your phone, because in binary you don't open an account. In binary, the chart goes straight from the binary platform into TradingView, so you're not able to open an account for that one. So what you need to do is to either take a screenshot of your analysis, or you save the analysis. So any other question before we close for the day?
I have a question, sir.
All right, and that'll be the last question I'll be taking for the night. All right.
My question is, we've been talking about the price action. Now, I really want a simple explanation on the same price action. What is it all about when someone says price action?
Okay. What is it all about when someone says price action? Price action. Okay, according to the name, price action, the action price took when price was in this level, the action price took when price was at that level. That's why it's called price action. And then you find people telling you support and resistance. Where was price supported when it was in this level? Where was price supported when it was at that level? What did price do when it got to this level? Was price resisted when it got to that level? That's the action of price at a given at a certain level. The action of price at a particular period of time. Okay, so that's why we call it price action, because we want to understand what did price do when it got to this level. And I hope you know that this what we are talking about price, the price we are talking about is all these digits here on the right corner of your chart. These are the price. Now if we talk about this, this is NZD, which is New Zealand USD. It simply means that New Zealand is currently on 0 points. Sorry, it means that USD is currently on 0.72002 for New Zealand. You need 0.72005 right now to get 1 New Zealand. So you can see what the price is moving. It's moving up and down, fluctuating. So you want to ask yourself, if you're a price action trader, what is market doing now at this level? What is market doing? So when you view out to see what market is doing, you can spot out a support and resistance zones to see that it has supported here before, supported here before, supported here before. Now market is also supporting here. So price action tells you that what the price is doing is that price is being supported by a certain zone in the past. Okay, price is being supported to go up, or price might be resisted to go down. So it's a very simple simple thing, just by the word alone, price action. I hope you understood right now.
Yes, sir. Thank you.
All right. Maybe I'll take one more question before we close. Any other question? All right. Any other question before we close? I remember a question someone asked me some time ago, and the person said, "Tim, is it right to use indicators as a price action trader?" And then now let me give that answer. I remember I also asked that question in my Telegram channel. It's not wrong to use indicators when analyzing the market, even though you're a price action trader. Now, when it comes to price action, we have the semi-price action traders, and we have the pure price action traders. The pure price action traders don't use any indicator, even moving averages. They don't use any indicators, even moving averages, as a pure price action trader. What you're using is your support zones, your resistance zones, your chart patterns, your candlestick patterns, your and multiple confluences to take your trades. You're not using any indicator. But if you want to be a semi-price action trader, it means you're applying price action with some certain indicators. All right, it means you're trying to apply your price action with some certain indicators like the MACD for figuring out momentums, figuring out divergence, using things like moving averages to figure out some support or resistance zones. Okay, like you see the moving average here resisting markets, you see the moving average here supporting markets. Okay, So this is a semi-price action trader. He's relying on his price action, but he's also using indicators to gain more confluences for his trade. So there's nothing bad in using indicators while taking your trade, but don't allow don't use so much indicators if you really want to be a price action trader. All right. So if you now ask me which is the best between the two, and I'll tell you that using price action is much more better than using indicators, because when you use price action, you're trying to view the past, you're trying to view the future through the past, but indicators always tell you what's currently happening. Okay, indicators cannot even tell you what might happen in the future, but when you use price action, you can actually predict what can happen in the future. And that's why you see traders win or lose, because since it's forex, predictions could go wrong and sometimes predictions could go right. And that's why it's always good to apply proper risk management. Okay, when you apply proper risk management, you'll be able to risk a little. If the market goes against you, you know you lost just little. And if the market finally goes your way, then you know you ain't so much. I hope that was understood.
Yes, thank you.
All right, so traders, I'm super excited having you guys in this training tonight.
Thank you so much.
All right, so I hope you all understood a lot.
Yes, very, very.
Good. So whenever I give you strategies on my YouTube channel, so you should be able to know how to use those strategies, applying little price action knowledge you've gained here tonight, right? So that you can prevent some certain spikes from occurring against you. I hope that.
Yes.
All right. So let us continue in our Telegram channel. So if you haven't joined the academy and you would love to join, please endeavor to join. Okay? It's very important to join that you learn forex and become an independent trader. Very, very important traders. And if you don't have a whole $50 to learn to come into the academy, I have a little option for you. Let me show you something. Have a little. Please turn off your mic. Turn off your mic. Turn off your mic. Turn off your mic, please. Trader, please turn off your mic. I have a little option for you. You can decide to learn just how to create boom and crash strategies. This is the video on my channel here, as you can see, but only those who can have the link to it can really watch these videos. These videos are going to teach you exactly how I create my boom and crash strategies, so that you can use it and learn how to create strategies for yourself and be independent, not relying on people to post strategies before you can get a strategy to trade. So once you have hold of these two videos, you'll be able to learn how to create strategies by yourself. And I'm gonna leave it for anybody who wants it as low as $30. Okay, if you want to learn it, or if you want to join the academy and learn everything in full. In the academy, you're also gonna get access to this. Everybody in the academy is gonna also get access to this. Okay, so if you don't have $50 to join the academy, with $30 you get access to this. But if you join the academy, you automatically have access to this. So whichever one you want, okay? I just want to put everything on a very low price for everybody, so that we all can keep winning. All right. So for the meantime, I remain your one and only Forex skill coach, team agent, and make sure you stay safe and keep winning. A good
Thanks
night.
and God. Thanks and God bless. Have a wonderful night. Rest.
A wonderful night.
All right, traders, let's keep winning.
Thank